Today's topic, I'd like to talk about if a life insurance payout is taxable. Now, the simple answer is no, it's not. In general, what the IRS says is that, to keep it very simple, is if it's an expense on one end, then it can be income on the other end. Of course, if it's not an expense, then it can't be an income on the other end. So that just kind of keeps it simple as far as in the future, if you ever have a taxable situation where you question if it's taxable or not, well, that's it. And even the policy gains off of what you've been submitting throughout the years is not taxable. So let's just say, for example, you've been submitting $10 and $10 and $10. Let's just say you've submitted $30 total, and the policy, at the end, you end up getting $32. Well, the entire amount, the $30 you've been submitting plus the $2 is not taxable. Now, there may be some situations where it is taxable, and I'm going to kind of go over those. Now, if the beneficiary chooses to receive the death benefits in installments instead of lump sum, i.e., if they say, instead of wanting the $32 all at once, they say, I want, $10 and $10 and $2. Well, any interest earned off of that might be taxable. So just certainly avoid that. I would just take the money and just kind of go your separate ways, and not to prolong the relationship with the life insurance company. Another instance is the estate tax. So for most people, this doesn't apply. For 2025, if there's above 13.99 million exemption, 13.99 million, above that amount is taxable. So as far as that life insurance policy out of that estate. Another thing is that the policy is sold or transferred to a third party. The death benefits and may become taxable to the beneficiary, so if it changes, just keep it simple. Employee provided coverage if the employer paid group term life insurance exceeds $50,000 are considered a non-cash taxable benefit. As well, cash value withdrawals for permanent life insurance policies, if you withdraw the total premiums paid, are generally tax-free, but any amount exceeding are tax-free. So let's just say the premiums you paid, i.e. you've been sending in by the mail or whatever form, is $30, and of course it after a couple of years it ends up being $33, right? Well, that $30 is not taxable. The $3 is taxable. So just keep that in mind. And also any loans against the cash value are not taxable. So just avoid loans if you can. I mean, if you're like taking loans out of a life insurance policy, you've probably been paying too much into it. So keep it simple. Life insurance is not supposed to be a ton of money. So if you're putting in a lot of money, just, or if you have an emergency situation, borrow the money. Loans, avoid those. And then just kind of avoid the gift tax as well. If the policy owner, insured person, and the beneficiary are all different people, death benefits may be considered taxable. Gift from the owner to the beneficiary. So just don't gift. Keep it simple. Just kind of rounding things off here. Life insurance is when people, of course, pass away. And keep it simple. If it's too complicated, you need to borrow money, gifting, splitting, things like that, don't do it. There's other avenues for doing it, but we to each their own. But do an IRA, do a low interest loan, take it against your house value, etc. But just a little bit about me, myself and my partner, we have a bookkeeping business. So we're fairly well astute in the taxation of all forms. Metro Bookkeeping, you can kind of see right there, www.metroacc.com. We've been around, so we've seen all sorts of situations, all likes and sizes. But if you like us, you love us, you want more of us, that's great. Click like and subscribe. Until next time, stay awesome.